G'day traders, Stacey Burke from Stacey Burke Trading. Just going to go over emphasizing using support and resistance levels and how that can have a major impact on your London Open and New York Open sessions. Now, one of the things that I've learned from Peter Brandt is that he likes to see these rectangles build up and at least 12 to 16 weeks. He likes the longer time frame trading. And Peter talks about when you get a breakout out of a range to complete a pattern, if that breakout is valid, that breakout bar should hold. And when that's invalidated, he's ruthless with cutting his stops. And one of the things that I like about the 1 hour charts is that they tend to replicate a lot of the support and resistance and breakout patterns very consistently. I just thought I'd go over today one of the basic ways that I approach the market. As I've told you before, I don't trade Asia. I look at the London Open Asia close. And the reason why that is that that's approximately 8 hours into the day. And we're just looking at November 30th, Wednesday yesterday with the pound yen. And just one of the basic ways that I'll look to set up for each day after the first 7 or 8 hours of trading. Now, pretty easy to establish the swing highs and swing lows from the first half of the day. In this particular case, the market from the US session was selling off and then gave a breakout short trade in early Asia. The market immediately pulled back and broke out of the Asia high. Now, this breakout bar at the 5 a.m. candle, the 5 o'clock candle, traders that went long into the Asia session, as the Asia close and the London Open come on board, you'll notice that this market pulled back into demand. Now, this traders who traded the breakout, who may have had their stop below the bull candle here or here, would have been safe throughout the session. But secondary traders may have also entered in at the US session open, which was now going back to retest the original breakout drive from London. Now again, with any of these trades, you'll look at a couple of things. We're seeing the original breakout hold, it consolidated into the London session, broke out again, pulled back, and then immediately resumed the direction and the bullish direction for the breakout. What's critical about both of these trades is that you have a 1 bar stop that, again, like Peter Brandt talks about, if that breakout is solid, or if this continuation bar is a solid trend follow through, then the institutions, the banks, whoever the larger players are in the market, they will protect this position. So if you're going to limit order or enter into the market, you know what your minimum stop is, and that's if that trade is invalidated or if that low is hit, then that trade is definitely over. Now you've got squeeze happening into the EMA underneath of an old high. You've got momentum from the original breakout, but the second part that Peter talks about as well is, again, projecting that range at least to get an idea of where the market could be heading. Now, in this particular case, the market trended quite strongly, and so traders who held on to this as it closed near highs may have looked to even see 1.5, or we may even see another second leg of this continue into today's session. So again, just looking at simple support and resistance after the market has had an opportunity to be trading for 7 or 8 hours, and you're looking at possibly the last part of the US session, so you're looking anywhere from 8 to 16 hours of trading. Now again, another example of where the market has come off of a 20 lowest close. The market has closed above the high of the 20 period lowest close. So when we see again into the Asia close, we've got a couple of breakout bars here. Any one of these bars would be an ideal entry, And again, you want to protect that position with placing your stop underneath of that bar. And again, either one of these three bars would have been fine. And now in this particular case, you don't know that, but once the bar breaks through the highs, now again you've got a breakout bar that if this market is going to continue strongly, this is a safe position to be in. Now we saw that follow through, and again we'll look at a couple of different pairs. Now looking at the pound, this is an example yesterday that where the market was quite messy. So a market like this, the only real trigger traders may have had was the short trade after the breakout. It immediately reversed. Now in this particular breakout bar that was bullish is against the original counter trend sell-off. So charts like these I try to tend to avoid. I'm looking for simple clean charts. We saw a short squeeze happen on Tuesday, and again we had our support line drawn. We had our resistance levels drawn in here. The market struggled to go lower. It broke out at the Asia close, pulled back, and then into the London Open. Again, we had a breakout candle. And regardless of what you think, at any point with the hourly chart, if you're trading this type of trading, you can see that you should at a maximum have a 1 bar stop. In this particular case, the market, as they do with a true short squeeze, it rocketed upwards and immediately tested out Monday's low bar, which was the low of the high period. And just looking at the Japanese yen, yesterday again, marginal new low into the Asia Open. The market broke back out during Asia. It stayed above the early Asia high, and then we had the inside bar at the London Open. So again, inside bar, strong breakout, maximum 1 bar stop, either the inside bar, and then once it broke out, moving your stop up to the low of that breakout bar. The market then proceeded to rocket up into the US Open and trend strongly throughout the night. So again, just encouraging you to use some really simple support and resistance levels. You want to look for at least 8 to 12 bars within a range. That gives the breakout a lot more validity. Keep it simple, traders. Manage the downside. As you can see with all these trades, when you get these breakout trades, you want to be able to project the range northwards. And the reason why that is that if you can project a distance, then you can measure the amount of risk you're taking on in that trade. And you want to look for 2, 3, 4, like Paul Tudor Jones, he liked to only take trades that gave him at least a 5-to-1 reward to risk. So use the ranges, use the support and resistance, start to be able to identify at these market opens these strong trend bars that are going to break out or have broken out. Position your stop, manage the downside, and keep it simple. Have a great trading week, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.